Last trading day of the week. It's a Friday. Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleague Sonia and Nigel. Guys, hi. Good morning. Are we feeling it yet?
Yes.
Nigel is feeling it.
It could be a fabulous Friday for some, freaky Friday for others, right?
I'm in the fabulous camp.
Fabulous camp. All right, we'll slowly get there, right, Sonia?
Yeah.
I mean, by about
Hope
10
so.
or so, 10, 15 or so. In any case, I mean, let's just quickly tell you what's happening on the market front. So we've seen some reversals. Yields are sharply higher by about 7-8 basis points. So that's US yields, which have reversed higher. They fell almost, the 10-year fell 16 basis points in the last two sessions, and overnight it climbed back up about 7 or 8 basis points. The good news, the big single most good news for India is that oil prices fell under a $90 barrel mark, and now they're at about $90.40 or so. But this is a far cry, almost $10 lower than where we were about a fortnight ago. And we've got the SGX Nifty futures, which is indicative of a 40-45 point higher start. Markets did sell off yesterday, and that does raise worries whether, I mean, the texture is changing, at least in the short term, for a little bit of trying to sell the bounce and see whether it sticks or not. So we'll find out. A lot to discuss here this morning. Good morning, guys.
Oh, absolutely. And, it's very clear that in our own markets, bulls do have the fear of heights, right? I mean, they're stalling around those 52-week high levels, around that 18,400 mark is where the Nifty is facing a bit of resistance. And yesterday as well, you saw a sharp fall in late trade. So let's see how things play out today. It was a very quiet day on Wall Street, so not too much in terms of cues. The Dow ended largely flat, as you can see on your screen. But in our own markets, the momentum is still on the upside, although it has slowed down a bit. So both FIs and DIs bought in the cash markets yesterday. It's a buy on dips market. You can't deny that. It's just that it's a bit of a pause that we're seeing at the moment. Now, in terms of data, what I'm watching is the existing home sales data that comes out in the US. It'll give you signs of whether, the economy is cooling or not. In fact, the St. Louis Fed president said that the policy rate is not yet in a zone that may be considered sufficiently restrictive. So perhaps they'll continue with more rate hikes through the course of the next few months. In that context, let's see if our own markets get to new highs or not. There's a gap up opening definitely at the start of trade, and then we'll take it from there. But since it's also Friday, people may not want to leave any positions open because global markets have been a bit tentative in the last few
And
days.
Sonia, there's a holiday in the US coming up as well.
Yeah.
So there's perhaps some amount of risk squaring off, etc., which is happening. I'm calling it the reversal of the reversal, and the graphics will tell you that. The initial reversal was a reversal from the lows, the market coming up very, very sharply. And now you've got a reversal of that starting to set in. I mean, it's very early days, so you don't want to jump the gun and say, well, this is it. But we've got to take stock of what's happening. So the reverse of what's been happening so far has happened last night. Yields went higher, and equities for the second straight session were lower. Nothing major. I mean, the 10-year was up to about 3.771. That's the yield, which is about 8 basis points higher. The S&P was down about 0.33%. More pressure, of course, coming through in the last 2 days on the NASDAQ. We've got some hawkish Fed commentary. This is Fed's Bullard, who basically said that we have to get to a zone of between 5 and 7%. Somewhere between 5 and 7% is where he sees the terminal rate, which is where the Fed funds rate kind of peaks out. Between 5 and 7. Now, it's a very large band, very wide band. But that did the trick. So Fed pricing, market pricing of Fed's terminal rate, that ticked up. So now for June, that number is now back to 5%. We are basically, with last night's terminal pricing uptick, only 3 basis points away from where we were before that big CPI surprise, which kind of led to this entire rally. So we're almost there, pre-CPI kind of levels in terms of market pricing of Fed rate. All of this also kind of means that this pullback that we've had on the dollar, that perhaps could be at a bit of a kind of risk of stalling, right? You want the dollar lower. The dollar has been moving lower. It's broken through important levels like the 20-week moving average. I think it was knocking at the 200-day. But, the point is, how much more? Could this be at a risk of stalling and perhaps a little bit of a reversal? I'm not saying that we are there yet, but you've got to be mindful. The big positive, as I said, is the fall in oil prices. I think oil prices now at a 6-week low, around the $90 per barrel mark is where we are at. So I think, so far, big falls in oil prices have trumped any up move in US yields, etc., or any falls in US equities. In any case, the impact, a straightforward direct impact of a fall in US has not been felt here all year through here in India. So I would say I mean, so far, you're fairly well protected. And to boot, you've got the fact that oil is sharply lower, which is a big macro help for India. Some worry here in India was also the fact that, I mean, the recent trade deficit numbers, etc., imports will stay very high because energy prices are high, but the world is slowing, so export growth in value terms will start to slow. So cooling off in energy prices, I think, is very, very welcome. Just 2 points on the Nifty. You're still very close to all-time highs. I mean, that could still come in the coming days. But for now, you need to look at downsides as well. You need to protect the 18,200 level broadly, which is not very far away from where we left off yesterday. The 20-day is still quite far off. It's at about 18,009. But that's the larger kind of level which must be held. And I think it should be held at this point in time. I could say that for going forward in the near term. So we'll see how it goes. I think the SGX is indicating a flattish to slightly higher start, but we'll pick up once markets start. Nigel, what are you watching?
Well, the US markets ended more or less flattish to the Dow, that is, but at one point of time it was down 300 points. So that buy on dips did continue there as well, that the Dow ended more or less flattish. From the India perspective, there are two big cues and both of them are positive. One is the dollar index continues to remain sub that 107 odd mark, which is very positive. And Brent crude prices at around $90 per barrel. Well, both those two data points tell me that this uptrend is pretty much intact. And that's the crucial factor. More than the equity markets, I think both these two, being well behaved, are very, very important from a bullish stance. We ended at the low point of the day yesterday, but I'm not too worried. And I say that because yesterday weekly expiry played out. And the bulls, well, they were positioning for a close above that 18,350 odd. Well, we did see that, the last tick actually was a little bit lower because that didn't play out. So that's one factor to note. And today the SGX is suggesting a pullback because normally post the expiry, we did see a bit of a pullback. It was an expiry-related fall that we saw in the final hour of trade. We're getting into the monthly expiry, that's next week itself. So expiry week as well coming up, expect volatility to pick up. On the Nifty futures as well as the Nifty Bank futures yesterday, there was unwinding. On the Nifty futures, well, it shared closer around 1.5 lakh shares. On the Nifty Bank, it shared closer around 2.3 lakh shares. Also, there was more amount of unwinding, not fresh shorting that we're seeing. The broad range is 18,200 to around 18,450. And I say this because of the options data. Let's focus on the resistance level, 18,450 to around 18,500. Between the 18,400 call and the 18,500 call, well, they added close to around 50 lakh shares between them, 25 lakh shares each. And the premium was between 60 to around 100 rupees. So that's why that's a resistance zone. On the downside, though, the 18,200 mark is very, very important because even yesterday, we saw that 18,300 put. It added close to around 15 lakh shares. The premium out there is around 90 to around 100 rupees for majority of the trading session. So that's giving you that 18,200 odd mark. Buy on dips on the Nifty is likely to continue. Maybe not buy the gap up of around 50 points because that could get sold into, as yesterday was expiry-related fall. But the buy on dips will continue. The crucial support zone, 18,000 to 18,020. That's because, the 20 DMA comes in there and the options data is indicating the 18,200 odd mark is important. But good to see. Friday morning, the bulls will be feeling good. Half a century to kickstart trade. What else, Sonia?
Okay, so 50 points higher for the SGX Nifty. But we have a lot of commentary coming through in the next 2.5 hours. So let's kickstart with that. We have Mahesh Nandurkar of Jefferies who says that the PSU index has outperformed the Nifty by 13.5 percentage points in CY22. He says the solid outperformance has been driven by state-owned banks, defense plays, power utilities and Coal India. Despite this outperformance, Mahesh adds that the PSU index price to earnings at 8.4 times is at a 58% discount to the Nifty and the historic average has been 36%, which still leaves some room for the catch-up trade. He says the EPS estimate for several key PSUs has also held up better. He says their preferred PSUs include SBI, BEL, Concor as well as Power Grid.
Well, Bhaskar Panda of HDFC Bank says the dollar index rose on the back of hawkish Fed official comments, higher US yields. He says the pound moved lower as recession fears loom. Adding that oil prices have been soft, which is a positive lead for the dollar INR. In India, he says the trade gap has widened, hence the pressure on the rupee will remain for the time being. He's expecting the dollar INR pair to trade in a range of between 81.45 to 81.65 for the day.
All right, and on the bonds, Bhaskar Panda says Indian bond yields have softened of late but have found support around current levels. He expects the 10-year benchmark bond yield to trade in a range of 7.25 to 7.30% for the day.
Well, we have a lot of stock-specific action that we'll track for you in just a bit in our special Top 10 segment. We're looking at Nykaa, Glenmark Pharma, Glenmark Life Sciences, Fortis Health, Blue Dart, as well as Mahindra Lifespace. Those are stocks on the back of positive news flow. On the flip side, you have Tata Motors, Paytm, ONGC, Oil India. They're stocks that are likely to react to negative news flow and maybe open up in the red.
All right, Abhilash Narayan is Senior Investment Strategist, Group Wealth Management at Standard Chartered Bank. Abhilash, great to